Welcome to Kenton's videos. Enjoy the video.
In this video, I will explain how to make a ledger from journal entries. We will begin by understanding the fundamental role of a ledger in accounting. Think of it as a collection of individual accounts, each summarizing all transactions related to a specific item, like cash or sales. This process is crucial for organizing financial data and forms the backbone for preparing accurate financial reports later on. Before we dive into creating ledgers, let's quickly review journal entries. Remember, these are the initial records of every business transaction, captured in chronological order. Each entry meticulously details which accounts are debited and which are credited, always ensuring that total debits equal total credits. Posting is the next vital step, where we systematically transfer these individual debit and credit amounts from the journal into their respective ledger accounts. Now let's walk through the actual posting process. For each journal entry, first identify every account involved. Then, find the specific ledger page for each of those accounts. If an account was debited in the journal, you will record that amount on the left or debit side of its ledger account. Conversely, if an account was credited, record the amount on the right or credit side. Always include the date and a brief reference. Finally, after posting all transactions, the next crucial step is balancing each ledger account. You will sum up all the debit entries on one side and all the credit entries on the other. The difference between these two totals represents the account's balance. This balance is then typically written on the side that has the larger total. These finalized balances are essential for preparing the trial balance, ensuring the fundamental accounting equation remains in equilibrium.
Thanks for watching. Consider subscribing if we helped you.